The Relative Strength Index, RSI, is a crucial tool in binary options trading, offering traders a way to measure momentum and identify potential overbought or oversold conditions to make informed decisions. As a momentum oscillator developed by J. Wells Wilder, the RSI ranges between 0 and 100, typically calculated over 14 periods. Its primary purpose in binary options trading is to help traders predict short-term price movements, which are critical for success in this fast-paced trading environment. An RSI reading above 70 indicates an overbought condition, signaling that the asset's price may be due for a downward correction, while a reading below 30 signifies an oversold condition, suggesting a potential upward price reversal. These thresholds are not fixed and can be adjusted to align with the asset's volatility or a trader's strategy. For binary options, where traders are required to make precise predictions within limited time frames, the RSI's ability to signal trend reversals is highly advantageous. Divergences between the RSI and price movements are particularly significant in binary options trading. For instance, a bearish divergence, where the price forms a higher high but the RSI creates a lower high, suggests weakening upward momentum and can guide traders to place put options. Conversely, a bullish divergence, where the price makes a lower low while the RSI forms a higher low, indicates diminishing downward pressure and might support a call option decision. The RSI can also be combined with other technical indicators, such as moving averages or Bollinger Bands, to improve the accuracy of trade signals. For example, using the RSI alongside a moving average crossover strategy can help confirm trend direction, providing additional confidence for binary options trades. Furthermore, the RSI midpoint level at 50 serves as a momentum gauge. Readings above 50 indicate bullish momentum, while those below 50 suggest bearish momentum. This midpoint analysis is useful in identifying the overall trend, allowing traders to align their binary options trades with the prevailing market direction. Adjusting the RSI's look-back period is another way to tailor its effectiveness in binary options trading. Shorter periods, like 7, produce more frequent signals, making them suitable for shorter expiration times, while longer periods, such as 21, offer smoother signals for longer duration options. Despite its versatility, the RSI should not be used in isolation for binary options trading, as it can produce false signals, especially in range-bound or low-volatility markets. To address this, traders often incorporate the RSI into a broader strategy that includes risk management, such as setting strict trade sizes and using expiry times aligned with market conditions. Mastering the RSI in binary options trading requires practice and a clear understanding of market dynamics, but when used effectively, it provides valuable insights into market momentum and potential turning points. By integrating the RSI with a comprehensive trading plan, traders can enhance their decision-making and improve their chances of success in binary options trading.